Can you lose money in a money market fund? Many Nigerians are now investing in money market mutual funds, but one big question still worries a lot of people, and the question is, can I lose my money? Money market funds sound like a safe investment, but let's explain what really happens and whether your money is truly safe in a money market fund. MMF for short, money market fund, is a type of mutual funds that invest your money in safe, short-term instruments. The aim of the fund managers when you invest in money market fund is just to preserve your capital, to make sure that you make a gain. The gain might not be something big, but the fund manager tries to make sure that you make a gain. So they invest in something safe like the treasury bills, like the government bonds, like the fixed deposits. All these are low risk assets, which means your capital is generally safe and protected. And you get steady interest, steady income, usually between 15 to 18%. Some do more, let me say even to 20%. So in Nigeria right now, this is per year, 15 to 18% or 20% per year, per annum. So it is much safer than investing in stocks, and it usually beats keeping your money in your savings account. But can you actually lose money? Technically, yes, but it is very unlikely. Here is how it could happen. Now, one of the way you could lose your money in a money market fund, and one of the way is if the government or company defaults, meaning if they fail to repay what they owe. Remember that your fund managers on the money market fund invest the money in a very safe government or very safe company asset. So if they fail to repay what they owe, but this is rare, especially since most Nigerians money market funds invest mainly in government-backed instruments like treasury bills, and it is very safe. Another case where you could lose your money in a money market fund is if interest rates rise suddenly. When interest rates jump fast, the value of existing instruments can drop a bit, but it is always temporarily. And also, this rarely causes an actual loss in your account. It might just reduce your daily yield for a short time. So you might not earn what you usually earn for a short time. Another way you could lose your money is if fund managers perform poorly. For example, if they take unnecessary risk, or they invest your money in weak corporate papers, they borrow weak companies, they borrow them your money. That is why it is best to use trusted fund managers, those who are experts in the game. Trusted fund managers like the Stanbic IBTC, like the ARM fund managers, like the FBN Quest, like the Zenith fund managers. These ones are already in the game for a longer time. They manage billions of naira, and they also follow strict regulations from the Security Exchange Commission, the SEC. Now, let's talk about how fund managers protect you. Fund managers diversify your money. The reason why it is good to invest in mutual fund is because you don't have to do all the stress of researching for what to buy. Okay, which company should I buy? Which stock should I buy? Where should I invest in? Because the fund managers diversify your investments across multiple instruments. They don't just put your money in one company, in one stock, or in one bond. So even if one investment performs badly, the other investment can help. And also, money market funds are also tightly regulated. It is regulated by the SEC, that is the Nigerian Security and Exchange Commissions. And each of the fund managers are required to maintain liquidity. That means they must have money to pay out withdrawal anytime. They must also be transparent. They must also do regular reporting to the SEC. That is why it is dangerous to invest with mutual funds that promise to pay a very high yield, but they are not really regulated by the SEC. We have many of them now. You just must look out for only the trusted ones. And because of diversifying your money and regular reporting, and also because they are regulated, that is why most Nigerian money market funds have never reported a loss since inception. Let's talk about the risk you should worry about. You see, while you might not lose your money, the real danger is what we call inflation. Let me explain. If inflation is, let's say, 25%, and your money market fund is paying you, let's say, 18%, what does this mean? It means your money is still losing value in real terms. So money market funds are great for saving safely, but not the best for building wealth long term. Because let's say you invest 100,000 naira in a mutual fund, money market fund today, money market fund, and you get 18% of this in 1 year. This is just about 180,000 naira returns. Now, the problem is, if inflation is going at, let's say, 20%, that means every year the cost of goods increase by 20%. That means what you buy for 100,000 naira this year, you might buy it for 120,000 next year. And if your money market fund returns 180,000, it still means you are not really making any profit. You just keep your money safe. This is my honest advice. Use money market funds for emergency saving. Use it for short-term goals. For short-term goals like paying rent, paying school fees, or for business floats. So if you want to start a business, let's say you want to start a business next year, and you're looking for a safe place to put your money that you will still receive some good returns, better than your normal savings account, where instead of you to get more returns, they will still deduct some of your money for maintenance, bank charges, ATM charges. Instead of that, if you put it on the money market fund, your money can grow for about 18% or even more. So then when you want to use your money to do business next year, the money is there with some other profit. So you can save it in the money market account instead of your savings account for short-term goals. Also, use money market fund to park your money safely while you decide on your next investment. So it is a safe place to put your money with good yield. Don't rely on money market fund alone if you want to grow wealth. You must try to combine them with equity fund. Combine it with equity fund or balance fund if you want to grow wealth, because the equity and the balance funds gives much more better returns. So yes, it is technically possible to lose money in a money market fund, but in reality, it is extremely rare. It is one of the safest ways to grow your money slowly in Nigeria today. If you found this explanation helpful, don't forget to like this video, subscribe for more Nigerian investing tips, and share this with someone who is still scared of losing money in a mutual funds account. Thank you for watching this video, and I'll see you in the next one.